All right, so you're looking at buying a home and you're wondering about the down payment. Two questions here. How much do you have to put down and how much should you put down? So those are two different questions. Let's talk about them both separately. What is a down payment? When you buy a home, typically a bank that is going to lend you money, do a mortgage to help you buy that home, requires that you have some skin in the game, requires that you put some money down. Traditionally speaking, 20% was the traditional down payment. So in other words, if you bought a $200,000 house, when you went to closing, the bank would bring a check for $160,000 and you would bring a check for $40,000 or 20%, and together you had enough to buy the home from the seller. Over the years, banks have relaxed those down payments a little bit and have gone to a 10% down payment, even a 5%. And then there are special programs for first-time home buyers or veterans that even will go lower than that, even as low as no down payment at all. And so there are a lot of different programs out there, but you have to be really careful when you do anything other than 20%, because some of them will charge you what's called mortgage insurance premiums. This is an additional expense that you have to pay over and above your regular mortgage, and it's for mortgage insurance. Now, I won't go into what that really means right now, but I do not want you to pay mortgage insurance. And so anytime you look at a mortgage, anytime you are looking at how much you have to put down, always ask that question: does this require mortgage insurance? And you should not pay that. Now, there are a lot of ways you can go about getting a lower down payment mortgage without paying mortgage insurance, and we'll talk about that on another driven video. But just know that that is not something that you want to be paying. It's a waste of money and it can be rather expensive. Now, the other side of this question is, how much should you put down? What should you put down regardless of what you have to? And my answer to that is that I want you to put down as little as possible in a low interest rate environment. And I will define that as anything less than 6% interest. I want you to put down as little as possible because it gives you the opportunity for what we call positive arbitrage. Now, it's kind of a big word. Let's explain what that means. Arbitrage is this idea that you can make money off of someone else's money. So let's use an example here. Let's say that ordinarily you were going to buy a $200,000 home and you would put $40,000 down, but you have a bank that's willing to actually lend you 100% of the purchase of the home. So you get to keep the $40,000 in your pocket. Let's say that you can earn 6% on that $40,000, and your interest that you're paying to the bank is only 4%. You're earning $2,400 on that $40,000, the 6%, and you're paying interest of $1,600. So you're to the good $800. You're keeping $800 by letting your money stay at work and using someone else's money for cheaper, right? That's positive arbitrage. That is the secret of a lot of wealthy people. The way they make money is they make more money on their dollars than they have to pay a bank or any other lender to use the other party's money, to use the bank's money. And so anytime you have a low interest rate environment like today, you have a good opportunity, not a guarantee, but an opportunity for positive arbitrage, and I like that. I'll give you my own personal example. Last time I bought a home, I could have paid cash. I could have just wrote a check for the house, but I actually borrowed 100% of the purchase price, and I kept my money at work earning interest in other places. Why did I do this? Because my interest rate was 3.8%, and after the tax advantage I get on deducting the interest, it really only cost me 2.5% to borrow that money. So I felt pretty good, and so far I've been right, that I could earn more on my money than 2.5%, and that would put me in my wealth in a better position. So anytime you can borrow money at a low rate, under 6%, I like for you to borrow as much as you can, but you still need to be prudent with that. Don't overextend yourself, don't borrow too much, but do that in the proper way and it will put you in a better position. So hopefully that helps you understand what you have to put down, but also what you should put down in order to make the right choice.